Good day to one and all, and welcome to the latest edition of the BCAS Tax Gurukul series. In today's session, I will like to highlight on the important changes in the income tax law, which are effective from 1st of April 2019. And secondly, the important changes which CBDT has introduced in the income tax return forms for AY 19 and 20. Firstly, the important changes in the income tax law, which are effective from 1st of April. The first amendment has been brought in section 16 regarding the standard deduction from salary income. Now, the concept of standard deduction from salary income was reintroduced in the budget 2018 and it was capped at rupees 40,000. For AY 1920, the cap has been increased from 40,000 to 50,000, thereby providing an additional relief of rupees 10,000 to the salaried tax class payers. The second amendment has been brought in section 23, which talks about the deemed rental income provisions. Now, as per the old provisions, there was a provision where a taxpayer held more than two house properties or held more than one house property. Then he had an option to claim one house property as self-occupied, and the second house property was deemed to be let out, and the taxpayer had to pay tax on notional rent income. Now, as per the amended provision, the assessee can claim two house properties as self-occupied and there will be no need to pay tax on the deemed rental income on the second house property. If the taxpayer holds more than two house properties, he has an option to choose any two properties as self-occupied and he will have to pay tax on the notional rent income only on the third house property. One more amendment in section 23 pertaining to real estate builders. It says that taxpayers who hold house properties as stock in trade and house properties which are not let out, as per the old provisions, the taxpayer had to pay tax on notional rent income after the expiry of 1 year from the end of the year in which OC is received. Now, as per the amendment, the time limit of 1 year has been expanded to 2 years, and hence the builders or the real estate builders whose stock in trade are not let out, they will have to pay tax on the notional rent income only after 2 years from the expiry of the financial year in which OC was received. The next important amendment, which is effective from 1st of April, is pertaining to section 54. Now, as per the old provisions, whenever a taxpayer being an individual or an HUF earned long-term capital gain on sale of a residential property, if that capital gain was reinvested in another house property within a stipulated period of time, then the capital gain was not subject to tax. However, the restriction was that the investment had to be done only in one house property situated in India. Now, as per the amendment, the taxpayer can invest in two house properties provided there are two conditions attached to it. Firstly, the capital gain should not exceed 2 crores. And secondly, this option can be exercised by the assessee only once in his entire lifetime. The next amendment is pertaining to rebate under section 87A. Now, as per the provisions which are applicable for AY 18 and 19, the government had granted a rebate of rupees 2500 for persons whose income was less than rupees 3,50,000. Now, this rebate has been increased from rupees 2500 to rupees 12,500, plus it would be applicable to all taxpayers whose income is below rupees 5 lakhs. The next amendments pertain to provisions under section 194A. 194A talks about tax deduction at source on interest payments, interest other than securities. Now, the threshold limit for deduction of TDS under section 194A in case of banking companies or in case of post office was rupees 10,000. Now, the threshold limit has been increased from rupees 10,000 to rupees 40,000. The threshold for other deductors, such as other than the banking companies, the post office, the threshold limit remains the same, which is rupees 5,000. Another amendment pertains to section 194I, which regards to payment in regard to rent. Now the threshold limit has been increased from rupees 1,80,000 to rupees 2,40,000. There is no change in the threshold limit under section 194 IB. Moving on to the second part of today's video series, the changes in the income tax return forms for AY 19 and 20. Now CBDT has notified the income tax return forms for this assessment year on 4th of April and has introduced a number of changes which has led to more disclosure requirements for every taxpayer. Firstly, every assessee is mandatorily required to file their return electronically. The only exception carved out is for super senior citizens who are required to file their returns in ITR 1 or ITR 4. Secondly, ITR 1 and ITR 4, more popularly known as Sahaj and Sugam, they will not be applicable to individuals who are either directors of any company or if they hold any unlisted shares. The second important change is in ITR 2 and 3. Now, ITR 2 and 3 form requires disclosure pertaining to residential status of the taxpayer. The taxpayer will have to tick off the applicable option. There are three categories. Either the taxpayer will be a resident or a resident but not ordinary resident, and thirdly resident. Now, if the taxpayer is a resident, he will have to disclose the condition which he fulfills during the previous year, owing to which he becomes a resident. Condition number one, whether the taxpayer was in India for 182 days or more during the previous year, or whether he was in India for 60 days during this financial year and he was in India for 365 days in the previous 4 financial years. Now, if the assessee is a resident but not ordinary resident, he will have to disclose either of the conditions he fulfills, whether he was non-resident in 9 of the 10 previous financial years, or was he in India for a period less than 730 days in the preceding 7 financial years. Thirdly, if the assessee is a non-resident, he will have to disclose the residence country in which he was a resident during the previous year, and correspondingly he will also have to indicate the taxpayer identification number of that country. If the taxpayer is a person of Indian origin, he will have to disclose the total number of days he stayed in India during the previous year, as well as the total number of days he was in India for preceding 4 previous years. The next set of change has been introduced in ITR 2 and 3, which talks about information of directorship an individual holds. Now, if a individual is holding directorship with any company, he is mandated to inform or he is mandated to disclose information pertaining to the name of the company, the PAN of the company, whether the shares of that company are listed or unlisted, and the director identification number. The next important and very crucial change which has been brought about in the income tax forms is pertaining to the disclosure of information pertaining to unlisted equity shares. Now, if a taxpayer holds unlisted equity shares at any time during the previous year, he is mandated to disclose information such as name of the company, the PAN of the company, the number of shares held as on the first day of the previous year as well as on the last day of the previous year, number of shares which have been purchased or sold during the previous year with corresponding purchase price and the selling price. This information will have to be disclosed for every unlisted equity share held during the year. Next, the taxpayer will have to disclose whether he is located in an international financial service center and whether the earnings which have been earned during the year are solely in convertible foreign exchange. The assessee has to merely tick either yes or no for this option. The next amendment has been made in the schedule income from house property in ITR 2, 3, 5, 6 and 7. Now the taxpayer will have to mandatorily indicate the PAN of the tenant if tax has been deducted under section 194 IB. If the tax has been deducted under section 194I, then the taxpayer will have to indicate the TAN number of the appellant. Moving on to the next change. Next change is in schedule income from capital gains. Now in budget 2018, an amendment was made in section 50C, which talks about adoption of stamp duty valuation in case of transfer of immobile property. Now, as per the amendment, a variation of 5% was allowed, wherein the actual sale consideration was below 5% than the stamp duty valuation. 50C has allowed such a variation. Now, a consequential amendment has been incorporated in the ITR forms, which allows the 5% variation. Second change in the scheduled capital gain is in case the taxpayer has sold any immobile property. In that case, the taxpayer is required to disclose information pertaining to the buyer, the name of the buyer, the PAN, the amount of consideration, and lastly, the address of the purchaser. Next change has been made in schedule exempt income, which is in ITR 2, 3, 5, and 6. If the taxpayer has earned net agricultural income of more than 5 lakhs, then he is required to disclose additional information. There are four conditions, four particulars which he needs to input. Firstly, the location of the area in which the agricultural land is situated. Secondly, the exact area of the land in terms of acre. Thirdly, whether the land is owned by the assessee or it has been held on lease. And lastly, whether the land is rain harvested or rain fed. Next change is in Schedule FA, which talks about details of foreign assets. Here, three more particulars have been added to the schedule. The assessee will have to disclose information pertaining to any foreign depository or custodial accounts held during the year. He will have to disclose foreign equity and debt interest held during the year. And thirdly, whether the assessee holds any foreign cash value, insurance contract, or annuity contract during the year. The next change has been brought about in profit and loss account in ITR 3, 5, 6, and 7. Now, the old profit and loss account has been replaced with manufacturing account, with trading account, and lastly, the profit and loss account. So it has been segregated into three buckets. The next change, schedule GST, has been incorporated, has been inserted in ITR 3, 5, and 6. Now, in this schedule, the taxpayer is required to disclose every GSTIN held, as well as the annual value of the outward supplies, which matches with the GST return. The next change has been brought about in ITR 6, particularly for startups. Now, every startup will have to disclose whether it is a recognized startup by Department for Promotion of Industry and Internal Trade. If yes, the startup will have to indicate the startup recognition number allotted by DPIIT, the certificate number, and the date of filing of Form 2. The next major amendment in ITR 6 pertains to unlisted companies. Now, every unlisted company will have to disclose the shareholding pattern of the company during the year. It will have to disclose the shareholders, the details of shareholders as on the first day of the previous year, the name, address, the number of shares held, the face value of the shares, and the purchase price. It will have to disclose information pertaining to any share application received during the year, plus share application which is pending allotment during the year. The company will also have to disclose details of information about shareholders which were shareholders of the company during the year, but as on the last day of the financial year, they cease to be shareholders. The last major amendment or the change in ITR pertains to ITR 6. Now, every company is mandatory to disclose information in the form of schedule assets and liabilities, which was earlier in the case of individuals where the individual was required to disclose information about their personal assets and liabilities. A similar schedule has been inserted in ITR 6 as well. Now the company is mandated to disclose information pertaining to any land or building held during the year, any equity shares listed or unlisted held during the year, details of any loans and advances advanced during the year, details of motor vehicles, yacht or any mode of transport held during the year, details of jewelry, archaeological collections, paintings and drawings, and lastly, deposits, details of loans and deposits, advances from a person other than a financial institution. As we can see, the CBDT has inserted a lot of changes which has led to heavy disclosure requirements for every taxpayer. That's it from this month's video edition. Stay tuned for the next edition. Goodbye. Have a nice day. Thank you.